Another stock which you don't usually see up on very heavy volumes, Niveli Lignite up a whopping 16% in trade as well. Justdial posted a stable quarter. Profits have risen about 38%. Let's connect with the CFO now, Ramkumar, who joins me. So thank you so much for joining us from Bangalore. Numbers have been good in this quarter. What are the highlights that has led to this good run?
Q4 we finished very strongly, and it's been one of the best quarter as far as the sales and collection and number of contracts that we signed. Given the fact that this is a truncated month, only 90 days are there as far as the revenue accrual goes. So this happens, last year if you look at it, Q4 we grew 27% and we ended up growing 28% in FY16. So similarly, we believe that we grew 26% and we have conviction that we'll end up growing anywhere between 25 to 30% in FY16. So number of initiatives that we have taken on the sales and marketing front. We added some 300 odd people during the quarter, plus we also have started ramping up in Q3. We have added people in the Tier 2, Tier 3 cities. So all those initiatives are going on, that's on continuous basis. So you will see this kind of trend reflecting in the quarterly number of the initiatives that we are taking in terms of both geographic expansion, in terms of manpower, plus our own conviction with the large number of consumers going online. It's sort of becoming easier for us to convince the small businesses to come on our platform on a paid basis. So we have core businesses looking very, very strong in our view.
Now I want to talk about listing addition and really how is the revenue from that changing. How many listings did you add in this quarter? What's the growth really looking like? Because the stock's been under a bit of pressure on a YTD basis, underperformed on a year basis as well. I think revenue and monetization is something that the market is looking very closely at this stage for you.
So we always maintain that the overall paid listings will grow in the mid-20s, and that we have no reasons for us to change that. As far as revenue per campaign is concerned, we have always maintained that revenue per campaign is a function of multiple variables. As we are expanding into the smaller cities where the ticket sizes are small, that will tend to drag the average down. As the overall base increases, as the existing number of the consumers, the vendors, start renewing and they pay at a higher renewal amount, that tends to drag the average up. So at any given point of time, the average revenue per campaign may go up or down 1 or 2%, depending on the relative impact of each of these variables at any given point of time. So we continue to maintain that, and given our initiatives, we believe that the overall number of campaigns should go anywhere between 20 to 25%. That's our belief and conviction.
Ram, I want to talk about the Search Plus function. It was a pilot program for Justdial from the beginning of this year. There's been a lot of work on the back end for you. The big question is, when do you start really reflecting on your balance sheet? How do you plan to monetize it? You already have a bunch of listings under Search Plus. When I spoke to you last, you were looking at expanding the scope of Search Plus as well. How are the plans coming along?
Yeah, we have multiple monetization opportunity. There's going to be a transaction fee. There's going to be a shopfront fee. We are developing a product for the vendors, what we call vendor application, which will allow any business with a physical product to sort of to have a seamless online and offline platform with a billing and inventory system completely in sync. So we are developing that system that should be up anytime in the next quarter. So with that, we believe that the large number of vendors who are outside of the online play right now will seamlessly come into the online platform, which is what we call the online to offline play. So as far as we are concerned, the monetization, these are the three apart from the regular one, which we have the subscription fee for ranking, which is the current product for search, as well as banner ads. So these are the 5 sources of revenues which we anticipate we will generate once Search Plus starts monetizing. And then as far as margin is concerned, earnings are concerned, this will be a high gross margin business for us as the Search Plus scales up. That will add substantially to the margin, because a lot of the cost in that are required to be invested and incurred is already sunk, is already done. So our belief is that as it scales up, we will see accretion to both top line and margin. Meaningful accretion should start happening from FY17 onwards, 16-17 onwards.
Let's talk about ad spends in this quarter. How much are you looking at spending? What are the details on the same? Because ad spend isn't something that we particularly talk about when you talk to Justdial, but it seems like it's creeping into your balance sheets now.
Look, we have to spend money to sort of introduce or do a one-time spend to launch the Search Plus. That's going to happen. It's going to happen in the next couple of months. We start doing that spend. The quantum we always said that it's about 100 crore that we're going to plan to spend. It may be over several quarters that will make this spend, and the immediate objective is to sort of introduce, look at consumer engagement, build up the traffic, and then think of monetization, and in parallel work with the vendor in terms of getting them on board onto our platform and have them meet the delivery and other commitments that they give in terms of the value proposition to the consumers. That's the idea. So the ad spend will happen in the next couple, starting from in the immediate next couple of 1 or 2 months, and over the next several quarters.
Is it a cause of concern? Because what kind of an impact do you see, Ram, on your margins because of these kind of spends coming in?
Definitely, this one-time spend will impact margin. That's why we have always been guiding, and we have been telling that excluding the one-time spend, the margin should be stable, despite the fact that we continue to invest in the Search Plus product, and that will continue through this year as well. So we maintain a stable margin, but definitely this one-time spend will impact margin. But it is being the nature of one-time, that should not be a cause of worry to anybody.
Ram, we've also announced a buyback. This at a time where your stocks underperformed. In fact, it's down at 37%. I was just checking the Bloomberg from its recent 52-week high, which was hit in August last year, about 1,900 rupees per share. What's the rationale behind the buyback, and what kind of a quantum and pricing are you expecting? If you could share something with us.
The pricing is determined on a regulatory basis. It's 6 months average or 2 weeks average, whichever is higher, and the quantum is 25% of paid up capital and reserves. So that comes to approximately about 170 crore, or on an average, current average price, it may come to about 2% of our share capital.
All right, Ramkumar, thank you so much for joining us. Justdial stock down 14%, YTD up 1.5% in trade today. That's all we have in the world of midcaps, but on the other side, we put the focus on the biggest mover of the day. Sun Pharma misses the mark by a very wide margin. The consolidated profits with Ranbaxy missed street estimates, stock down 8.5%. On the other side, we speak to the Sun Pharma management on what's gone wrong and the road ahead.